Hey guys, welcome back to another weekly real estate market update for week ending January 29th, 2023. Before we get started, that you like and subscribe and press the bell notification button so that you can get notified when I put out content like this. All right, let's get right into it, guys. All right, so here it is, guys. So for this past week, the housing market update, $2,500 monthly budget buys a $400,000 home for the first time since September as rates dip below 6%. That is really good. That is very impressive. I'm so glad that rates are ticking down. It really helps with the market picking up. Let's get right into some of the leading indicators here. Some of those buyers are returning to the market. So it says Redfin. Pending home sales fell 23% from a year earlier during 4 weeks ending January 29. That means that still, pending home sales are going down. The market is still softening. I believe we are in a housing recession with the rates going down to 5.99. Yes, while some buyers are coming out, I don't know that this is really going to be enough to bring things back to normal activity. You will see here that inventory is coming back almost to normal levels. This article goes on by saying that 37% of newly listed homes accepting an offer within 2 weeks of hitting the market, the highest level since July. That's good. That's a good thing. Although KB Homes just announced that they had a 68% cancellation rate on housing. KB Homes is one of the largest home builders in the country, and they just announced this week that there was a 68% cancellation rate. So conflicting data here, guys. Really, really conflicting data. And remember, real estate is very market to market driven. So it's very market specific as to what's happening. Okay, let's go. Mortgage purchase applications rose 15% from their early November through, but declined 10% from a week earlier, which could reflect a touch and go nature of housing market recovery. For week ending February 2nd, 30-year mortgages rates down to 6.09%, hitting their lowest level since September. The daily average was 5.99 on February 2nd. Mortgage purchase applications during the week ending January 27th declined 10%. So less people are applying for mortgages, for new purchases from a week earlier, but they were up 15% from their earlier November, though seasonally adjusted. Purchase applications were down 41% from a year ago. Guys, purchase applications were down 41% from a year earlier. That is a big deal. Like here, let's just unpack this a little bit here. When you start and you think about a year earlier, we're right now, as I record this, we're in the first week in February. A year earlier, the market had already slowed down, right? Last January, February, the market had already slowed down. At least I was experiencing that in my market. So for it to be down 40% from a year earlier, man, that is significant on an already, to me, interpreting that market last year this time was already slow. Let's keep going here. Google searches. This is a really, really important lead indicator. I've noticed that when Google searches are up, mortgage applications are also up. Viewings also up. So direct correlation of what we can expect to see next week. So it says Google searches home for sales were up 44% from their November low during the week ending of January 28, but down 16% from a week earlier. And let's go into the database on homes listed and or sold during this period. Okay, the median home sale price for the U.S. is $346,875, up 0.8% from a year ago. The median asking price of newly listed homes was $372,829, up 2.9% year over year. The monthly mortgage payment on a median asking price home was $2,349 at a 6.09% mortgage rate. The current weekly, which is the current weekly average, that's down $160, guys. So this is good, $160, which is 6% less from the October peak. So there goes that ugly monster inflation creeping up and the Fed's hiking up interest rates creeping up. Look, guys, the Fed's just increased rates by 0.25%, although that the Fed fund rate does not directly impact the mortgage, the 30-year mortgage rates. It has an indirect impact to it. It's a 10-year treasury that actually impacts the mortgage, the 30-year mortgage. The Feds just increased the rates 0.25%, and they're trying to tame this ugly monster of inflation. It seems to be working, although Jerome Powell says that it's too early to say. and that he already said he will not stop bringing the rates down until he has this under control. He also said that there will be no rate decreases here in 2023 and nothing in sight for 2024. So I don't know what he's doing. Maybe he's just trying to scare the markets because he really wants inflation to go down. But if that is the case, we real estate investors and homeowners, home buyers, if you're looking to buy a home, you need to be paying attention to what your mortgage payments are going to be. Let's go down through the rest of this stuff here. New listings of home for sale fell 16.7% year over year, the smallest decline since the 4-week ending September 25. Months it would take for the current inventory to sell at the current sales pace was 4.6, up from 4.3 months during the period 4-week ending and 2.2 months from a year earlier. That means inventory has literally doubled, all right, from 1 year earlier. So simple economics, right? Inventory is up and demand is down. Prices have to come down. Interest rates come up. Cost of money goes up. To get that same house is going to cost you $511 more than it did the same time last year. That means sellers have to bring down their prices. 37% of homes that went under contract had an accepted offer within the first 2 weeks on the market, the highest level since July, but down from 45% a year earlier. Homes that sold were on the market for a median of 49 days. I think that's going to change dramatically because this is a lag indicator. That's up from 33 days. That's significant. A year earlier, and a record low of 18 days set in May. Again, this is all lag indicator. So all of this past, that doesn't mean that this is how the future is going to look, right? 21% of homes sold above their final list price were down 40% from a year earlier, and the lowest level since March of 2020. On average, 5.6% of homes for sale each week had a price drop, up from 2.2% a year earlier. And lastly, the final asking list price ratio to actual close ratio fell to 97.7% from 100.1% a year earlier. That's the lowest since March of 2020. We're talking about March of 2020, guys. That is that's a big deal. That was COVID, March of 2020, right? And we're comparing current data to March of 2020. That's huge. So my thoughts on this, I think that the market is good news, right? That the interest rates are starting to stabilize. I don't think the Feds have already clearly said they're not going to stop. I think there's going to be some unemployment happening this year. I believe personally that we're in a housing recession. Data will tell us, right? A year. We may not be officially in a recession, although I believe that we are. I think in a couple more months, everything from the peak will be below that peak in terms of valuations as interest rates continue to climb and unemployment continues to happen. Again, thanks for watching, guys. Appreciate you guys. Make sure that if you like this content and you appreciate this video, like, subscribe, and press the notification button so that you're notified when new content like this comes out. Appreciate you guys. Thanks for watching. Hey guys, thanks for watching this video to the very end. If you want to continue to watch videos like this one, click this video right here. I think you would enjoy that. And if you want to continue to learn from me and learn how to create wealth through real estate investing, check out my online course. It's in the links below. It's how to get your first off-market deal in under 60 days or less. Thanks again for watching. Really appreciate you guys. Peace out.